Hello everybody, this is FX Mesh coming your way again. This is our weekly Forex and Indices review, and we're going to be looking at some indices and some Forex pairs which we expect to make some movement in the new week coming forth. And also we are already in a new month, so we want to see what the market has for us in these particular pairs. We're going through a few indices and also a few number of pairs. Now the first one we'll be looking into is the Nasdaq 100, and we're looking on these for the week of June, the second week of June, which is from the 6th to the 10th of June. So we want to know what might possibly be the outcome. First of all, technical trading depends basically on the past to be able to predict what is in the future. So what we have here is NAS 100, and we're going to be starting with NAS 100 now, and we are going to be using the top-down analysis pretty much to know exactly what is the trend, because the first thing you want to do in the market is to understand where is the direction of the trend. What's the direction of the market? In other words, you want to know the trend of the market, which will help you to navigate your analysis in the right direction. You don't want to be trading in the opposite direction, or you don't want to opposite the trend. You don't want to trade against the trend. You want to go with the trend. That is why we want to do our top-down analysis. Now, first of all, when I say top-down analysis, I mean that I have to go to higher time frames, maybe monthly, whatever. The monthly time frame, first of all, tells me that the market has got to a point around it's hit 16759.0. That's the price in USD, 16,759, and it started to push to the downside. So it's giving us a bearish signal, okay, as it stands now. And if we have that in mind, that we have a bearish signal. Now if we step down to a weekly time frame, what we see is that confirms, that even gives us more information about the bearish trend. Now, how is it a bearish trend? You can see that before that bearish trend we're talking about formed, there has been a push to the upside, which indicates a bullish push to the upside, a bullish traction. Now the market pushed, or let's take it from here, from this point, this structure. Now it pushed to the upside, and we can see that after drawing a trend line, we've drawn a trend line. A trend line must touch at least 2 points from the start. So let's say we draw from here. We can see, like, let's say from here, because the idea where I'm starting from here is I wanted to touch 2 points. Okay, 2 points, tricky. Okay, 2 points, stick to 2 points. Yeah. So we push to the upside. Now what did the market do? The market broke the trend line and pulled up and pushed to the downside. Now remember that when you are trying to set up, create a setup, all these points you are seeing here, here's a structure. Okay, here's a structure, here's a structure, here's a structure. These are structures, and these structures are very important. Now if you look at what the market did here, you can see that when it broke the trend line, it retested. Now what did it retest? Let's try and prepare that point with which it retested. You see, it was a retest. This retest clearly shows that it has confirmed the breaking of this trend line, meaning that it has changed its character. The character was pushing to the upside, now it turned to the left side. Now this is for the weekly. Now let's go to the daily. Let us see. I expect the daily to be in a bearish trend as well. So you can see what the market has done on a daily time frame. The market has broken what? The trend line, broke it and retested a couple of times before it started pushing to the downside. Okay, now imagine, now in the simple break and retest rule, when the market breaks a structure, it retests the structure. It gives you a signal in the direction of where it's headed. Now you can see that after a break of this structure was formed from this move here, this change in move me here. That's how we draw this line. Now it broke to the structure. Then what do we do? Now let me change my now you can see this candlestick here. Break, retest, break, now retest, pull back. You can see it's playing around, but even if you're taking it from if you're taking this market from a clear candlestick here, because what happens is a break and retest strategy is such that when the market breaks the structure, it retests the structure and push to the downside. The candlestick it gives you in the direction of where it is now tending will be the direction of the market. What I'm saying is the market has broken the structure, it's retested. Now look for a clear candlestick away from that structure, which is this one, a clear bearish candlestick to confirm the direction. Now if you take a sell from here, take a sell from here, from this candlestick here, this particular one here, take a candlestick from here, and look to the left to find where you can actually put your take profit. You can as well look here and say, okay, first of all, this is a take profit here. This is your first one, take profit, because this is the next structure to the left. Then the next one should be this one. Now we can as well draw it to the left because of this point here. So TP can be here, TP2 can be here, TP1 can be here. Now, while you can leave your stop loss at this point, just above the structure, and you at the end of the day you still have a buy. Although your account would have been threatened by this move to the upside, but let's take that aside for the meantime. Now that's how break and retest is. Now that's a very simple way of trading. Now what is going to happen? What do we expect the market to do? Well, the market first of all it does what it wants to do. What we want to do is to find the best way to be on the right side of the market. So now if you look at the market, the first thing you need to know is what is the direction of the market. What trend is the direction? I mean, what is the trend of the market? The prevailing trend, and the prevailing trend is still what? It is still bearish, because we have the latest structure here, and now where the market is now, the market is below the previous structures. This here is below it, is here. This is the market, so because of that, it's pushing to the downside, and you can see that we can even draw a line to confirm that it's still pushing to the downside. You can see, and again you can even draw a line here you can even draw a line based on the structure, and you can see that the market has pushed back and kind of tested the structure. If I see this candlestick push downward, this black candlestick push downward clearly like this, and closes down here like this, like this black candlestick to the downside, I will take a sell. Yes, I'll take a sell. You see, remember this is a daily time frame. I'm just showing you an example of what simple break and retest strategy will do. I mean, of course, one candlestick is going to take you 1 day in this particular setup. Now, if you don't want to wait too long, you can as well step down to a lower time frame and see what's happening. You can see how clear it is. Let us see clearly. You can see that. You see it has tested it and it's pushing to the downside. One candlestick here, one candlestick here, one candlestick it represents 4 hours. You have a clear 4-hour candlestick here. If let's imagine you have taken a sell after this candlestick, you would have still been in profit. You see, you would have still been in profit with a 1-to-1 risk ratio. But that's fine. Now let's see how many pips would that have been if you have entered here, down here. That will be good. That's 2956. Okay. Now right now, the way the market is here, what we're expecting is that the market is tending towards it overall. It's on an overall bearish push, right? Now it's on pushing to the downside. It has tested this level. It's pushing down. I will wait for the market to come down to give me another candlestick down to confirm this sell. It's already a sell. Definitely, I would be waiting for the market to just give me another candlestick here, push to the downside here. Then I'll take a sell. And what I'll put my take profit under here. I'll draw this one here under here. I'll stop here. Okay, I leave my take a stop loss here, and this is what would be my interpretation of the market coming this new week for NAS 100. Now, simple break and retest and all that is what we need. See, that's how we go. And if you step down to a one day time frame, you can see that the candlestick is already formed. You can see that this last candlestick here is already engulfing this bullish candlestick. What does it mean is that by the time the market opens, we'll see what's going to happen, but most likely we're going to take a sell for NAS 100 using break and retest. So now let's go over to the next indices, US 30. Now US 30. Now we're going to clear what we've drawn here. Go back to our calculations and our analysis, and what we want to do is we want to first of all go to higher time frame, let's say the weekly or even the monthly first of all, and you can see what we want to do is to identify the direction of the market. That's the first thing you do. Identify the direction of the market. Now, what is the direction of the market? What's the bias? The bias is what is pushing to the what downside. Now, the market is actually bearish on a 1 month time frame. It's still bearish because the market has pushed to the upside, right? Now, sorry, seconds. Now the market has broken this level here. This is structure here. After the structure, it pulled to the downside, right? Then it pushed to the upside. It broke this. The market broke this level. Okay, it broke this level and pushed to the upside. As far as the market has broken a structure and pushed to the upside as a result of testing and whatever, it goes to the upside. The market is around this area. The market is in a bullish trend as it is for now. At this point in time, this is a bullish trend until it breaks, until the market comes down here, retests this level and push to the downside. Then it means that the trend has changed. But for now, it's still in a bullish trend. It's bullish trend for 1 month time frame, so we'll keep that one in mind. Okay, we'll go step down to the lower time frame to get more information as regarding what's happening, because here's where we want to pay our attention. Okay, so we're going to the weekly time frame. Wait, now let me go to the monthly first. Now the weekly, what the weekly does is that the weekly gives us enough information about this area, and according to the weekly time frame, the weekly will look like it will give us more, it will give us an idea that the market is consolidating. Now let's go to the weekly. See, it's consolidating. It has been consolidating for, look at it, since May, well, now in June, you can see that the market is, oh sorry, May 2000, since May 2021, it has been consolidating till May. So a whole year, it has taken a whole year to consolidate, and you can see what's happening. The market's already giving us what it's trying to break the structure, and trying to break that consolidation structure and push to the downside. You can see through this as this trend line defines it. You can see it's slanted to the line. See the direction of the trend line is pushed to the downside, which is indicating what a change of character. Okay, now we're not entering on a weekly time frame. We're just trying to know what is the bias of the market. What is the trend of the market? Now remember we said that on the monthly time frame it was bullish. On the weekly is what is consolidating, but it's giving us a sign that it's going to give more of the bearish. It's changing character. Now for the daily appears to be consolidating, but it's still giving us what more signs of the bearish traction. See, you see it. Now let's go to the 4 hours. 4 hours is still the same thing. It's still consolidating, but it's similar and all that. So what we want to do now is to wait for the market to actually give us a clear push to whichever direction it wants to go. Now what we want to do is, first of all, always pay attention to the latest structure close to where the market is. What I mean is, what is the latest structure? This is the latest structure. Here's the latest structure. So what I want to do is I just draw my structure level here. Okay, now remember the market pushed to the downside, went up. We don't know what it wants to do. It might consolidate a bit, but this might take a bit of time. So what I would expect, instead of waiting for the market to actually get to this point, what I would do is to zoom closer, come closer. Imagine if one candlestick is 4 hours. Imagine how many hours would the market take to come down to now play around this. It's going to take a long time. Except you're a swing trader, then you can wait for the market to. It's going to take a lot of weeks to get here, or maybe a whole week or thereabout or whatever. So what I would suggest is that we should look at this. It's very easy to say, oh, let the market come here, break and retest and push it downside. No. So what we want to do now is we want to see what can happen. We want to see if we can find opportunities around this area. So we're going to step down to, let's say, 1 hour. Okay, let's try and see if we can find the structure there. Yes, what we see here is that the market went up from the structure here, break down, they went pushed up to the upside, down to the downside. So what we want to do is to, first of all, we want to is, this is the price here, current price. We have to identify the closest structure. Identify the closest structure here. Okay, now understand how the market is behaving. It went up, came down. Now what I will do is I will as well draw a line here to identify that there's a structure here on top here. Okay, then we have a structure here. What I'll be waiting to do is I'll be expecting the market to go whichever way. I have two options in my mind. I'll wait for the market to come down, retest this level, and give me a bearish candlestick after I retest. Once it gives me those two signs, I will take a sell. As simple as ABC. Put my stop loss just on top of the structure, and maybe I can take take profit with somewhere around here, a TP1, or I can take it down here to the next point. Now here is a major structure. Around here is the minor. This is a minor structure. So we want to trade around this area and see where the market is going to go. Now also I can wait for the market to reverse, change its mind, break through this level, This is a point of interest. Break through this point of interest, retest this, and give me a bullish candlestick to confirm that retest. Then I will take a buy. To the upside. So whichever way, that's how I'm going to trade US 30. And US 30 is not Forex. It has a specific time where it starts to react, when the market is opened and we cannot trade. Now, let's go over to German 30 quickly before we go to take some few Forex pairs, and we can wrap it up. Now, for this particular indices, we step to the up time frame, the highest time frame. You can see it's pushing to the upside. Up, push down, up again, push down, up, down, up, down. It's a bullish trend, because what it has been creating, higher highs has been created, consistent higher highs. That's how you know the direction of the market. You must look at the structures and see to what level has it been building. See, it started making higher highs. Now the market, where is the current price of the market? The current price of the market is here. So as far as the market is still, look at this line here, as far as the market is above this previous structure, is still on a bullish trend. So what we want to do is to identify, first of all, the trend, and the trend is still a bullish trend. Now we step down to a weekly time frame. So we can just okay, let's say a weekly time frame. Okay, weekly time frame. Well, same thing. You can see that it's consolidating. Look at it's consolidating. So what we want to do is to find point of where it's going to break out. Point of breakout. So identify the structure, up and down, support and resistance. This is also a structure, but this is a minor structure. And where is the major structure anyway? Because it's gone up this way and come down. Okay, and let's leave that first of all. The market is here. We don't know what's. So zoom closer. You see daily time frame, remember. So what we want to do now, look for the next structure, the next significant structure. Here is the next significant structure here. You draw it out, and then to bring it out. Now the market is pushing. It came here, tested here, and reverses back, and hit here again. Put to the downside here. Now we don't even know what's happening. We don't know what's going to happen yet. But from what we have seen, the market is consolidating. It's bouncing. It's not giving us any very clear. The signal here is not clear. We don't know where it's going to go. It can go up, it can come down, it can go up. So, but what I expect is that I would rather step down to lower time frames and look for opportunities. Now I know here is already a level. So what I will do is to draw a line, 2 points to meet. Okay. Then that's 2 points to meet. I can draw another line here as well. You can see that the market is creating structures and pushing to the upside. You can see levels. So we are trying to identify how the market is breaking levels or retesting levels. It's either it's breaking a level or it's retesting a level. Either it's breaking a level or it's retesting a level. Look at it. Let's take it from here. Went up here, tested this level. It came here, it rejected it. Made an attempt again, it rejected it. Came for another time again. It consolidated a little bit and pushed to the upside, broke it, and started pushing to the upside. Now, what we'll be looking at for is, as far as the market does not pass this this trend line, as far as the market is on the left side of the trend line, the market is still bullish. If the market comes here, if it breaks this, once it breaks this line, then it's now giving us a sign of a bullish trend. So what we want to do is to zoom closer. Yes, we have the structure here. Okay, now we'll be expecting the market to do two things. So that it breaks through here, we test and gives us a candlestick, a bullish candlestick in the upside in this direction for us to go more buy, or we have to allow the market to retest. Well, it has already retested this level, but I'll rather wait to see what the market wants to do here, because the market is pushing to the upside, but now it is also giving me it's very hard for you to actually identify what exactly the market wants to do, because the market has come here. Oh, sorry, the market has come here. It has come here. That is tested. It came down, came here again the second time. It could be giving us what? A reversal. It could be. So we cannot really know exactly what the market wants to do. So the best thing is to wait for the market to play out, and once it crosses this line, then we'll begin to look for sales opportunity. Now let's go over to US pairs. Now the US pairs, they've been a significant move to the downside in the previous week. In the previous weeks, for the US dollars has gained. Let me say the US dollar has been like not too well. DXY is one of the it's an index. Actually, it's the index of all the American pairs. The index of the US dollars to all the major currencies. The US dollar against all the US currencies is what the DXY is all about. It's like an index. It's an index. So if you look at it from the 4 hours time frame, you can see that they've been to the push to it has been weakened. The US dollar has been weakened against all the major currencies, and recently it has tried to push, start to gain more strength. Now, and I drew two lines as the high of last week, this high of the week, this week I'm referring to the previous week, and the low of the week. So I did two. I was using the multi-time strategy to identify opportunities, to spot opportunities. Now that multi-time frame analysis or strategy is different from the break and retest I just explained just now. So that's my second strategy I use to analyze or to find good opportunities in the market. But let's use the break and retest today, but I will also like to explain the multi-time frame as well, which I use to I've been testing last week. I've just been testing that and just want to use that, because the most important thing about trading is I want to make profit. I want to put ourselves in the right side of the market. It doesn't matter what time frame, as far as you find good opportunities, take advantage of the opportunities and be profitable, and know when to enter, know when to jump out of the market, know your risk management, know what you're doing. Don't over risk, don't over trade, don't force trades. Once you have all these things in check, then you should be able to be profitable. Now here it's very simple. I can even as well remove all this, go to the higher time frame. Let's identify key levels. Okay, I can also identify the key level here as this is the major level. Key levels, major level, same thing. And 4 hours. Okay, 4 hours makes sense. Now then another structure is forming here already as well. Now the support, let's see, we can draw our support here as I think the trend is sort of bearish because there's a structure here. Says the market has broken it already. Structure here. Structure here. Structure here. Structure here. Broke it down. It's not giving us a sign of a bearish sign. It's pushing to the downside. So take note of that. Then step to the 4 hours time frame. You see, so 4 hours time frame gives us a more clear picture of what's happening. Very, very, very simple direction. Is on a bearish. You can draw your trend line, 2 points, 1, 2, meeting together to form the trend line. Okay, now there's a structure here already. Here, you draw your support. Okay, now focus on this area. Focus on this area. Focus on this area. And when you focus on this area, you can see another minor structure here on top here. In between here and here, this wick here and this point here. Okay, then you also have a structure here as well. Under here. Okay, on the 4 hours, remember. Now overall trend is what? Bearish. Okay, now it broke it, it retested it. This thing could be going see, trend pushed to the downside, it broke. Once this market breaks to the, now it's on a bearish trend, right? Once it breaks, and it has already broken, it broke it, it retested it, it pushed to the upside, it came down. We can't just say the market is going to go up. We don't know where it's going to go up. That's not a good setup first to know where it's going to go up. So the best thing is for us to wait for the market. This market could do like this and just break down, or it can go up and retest and push to the upside. So what I'm trying to say is that each time we're trying to analyze the market, we must open our minds to whichever direction. It could be up or it could be down. So for it to go up, it must break a structure. It must test the structure. It's very important. So 2 scenarios here. This market here appears is going to give us three things here. It's either going to consolidate, or it's going to break through the structure, retest and push to the upside, or break through the structure, retest and push to the downside. So that is what the situation is for here, for this moment, at this moment. Now, another way to go about this analysis is that I can use the multi-time frame analysis. The multi-time frame analysis is that I will analyze on a 4 hours time frame and enter on a 15 minutes time frame. Now, how do I mean? What I want to do first of all is that for the multi-time frame analysis, what we want to do is to what on the 4 hours mark the I'll just say find the low and highs of the week. 2, find the highs and the lows of the week. Then find the directional candlestick, which the reason why we're finding the directional candlestick is for us to know where the market, what trends, or what whether we're going to buy more or we're going to sell more in that week. Okay. 3, entry is enter 15 minutes time frame. Then our entry is based on the fact that we must find W's and double bottoms and double tops. Okay, and psychological levels, psychological levels, yeah, and trend lines. Psychological levels, trend lines must meet for us to find our entry on 15 minutes time frame. So that's what it's all about. That's what this multi time frame is all about. Now let us now explain this. I'm not going to go through this in all the pairs, but I'll just take. I'm going to take. Well, we're going to identify that. We're going to draw that. We're going to do that for this particular uh, indices. But because we have done already, we've done 3 indices. Let us do that for GBP USD. Okay, let's do that for GBP USD. We can do it for, this is an indices actually. What we need to do here is just for us to wait for the market to retest, break, retest, put to the upside, or break, retest, and put to the downside for this one. But I would like us to explain this multi-time frame in a forex pair. DXY is not a forex pair. DXY is an indices actually. But I would like us to identify this particular analysis, do this analysis on a US pair. And you know what, guys? GBP USD has a certain kind of characteristics that's always, it easily gives you this double top, double bottom attitude. And because of that, this multi-time frame works very well for GBP USD, guys. So now we're going to apply this on the GBP USD. Okay, and that's what I did in the coming week. That's what I did. So you're gonna be, it's a lot of, it's a very rough. I cannot explain this to you. This is going to confuse people that are watching, are listening as well. So what I want to do is to clean this, or I can, okay, stop 15 minutes time frame. Then let's see. Let me show you what I did in the past, in the previous week. And you see how I was catching good pips. It's really helped me. Okay, I'll just explain what I did here. I will not go over because I don't want the video to be too long. It's already too long now. Now, if you watch carefully, we're on a 15 minutes time frame, 4 hours. Okay, first of all, what do? Identify the lows and the highs of the week. The lows and the high of the week. Now, the first question you will ask yourself: when did the week start? Last week. The week started 30th. Now today is 5th of June, New Zealand time. Today's Sunday. It's at about 11:44 a.m. I'm just back from church, and it's 5th Sunday New Zealand time. So in your country, I don't know, it might be because we're in New Zealand, we are ahead of most countries. So it will be Saturday in your country, maybe Saturday morning or afternoon or evening. But it's already Sunday here in the morning. At about 11:45, you can see the time on the screen. Now, what you want to do first of all is to identify using the multi time frame analysis. First of all, I can put it here, or let me just hold on first. I want to write all the steps here, but that's fine. What I did was I will just explain what I did in the past, and we'll look forward to see what is going to happen in the future this coming week. Now, first of all, what I did was to draw, identify the lows and the highs of the week, and the week started on the 30th. 30th, you can see 30th here. You can see 30th here. So 30th, I was around here. So what I did was to, first of all, I right click, take your cursor, this is your cursor, put it anywhere on the screen, right click, okay, put it on the screen, right click here, click settings, go to settings, click appearance, then click section break. Okay, on the 4 hours, do that on the 4 hours. Okay, when you do that on 4 hours, you expand your screen. What you're going to see is, forget about all these lines, just forget about this line, just follow what I'm saying. When you do that, you will see a section break already formed on the screen. What does that mean? It means that the distance between this line and this line is 1 day. This is a day, it's another day, just like that. Now, last week, well, the week we are in, that's gonna be ending very soon. It started 30th. Let's check it. 30th was the 30th of See, 30th of May, 31st of May, 1st of June, 2nd, 10th, and today's 5th. Now, 30th of May, it was last Monday. Okay, 30th of May, last Monday. Okay, we want to first of all identify the the highs and lows of the week. Now, this candlestick formed a bullish candlestick formed. The first candlestick to form in this week was what? A bullish candlestick, and next candlestick was what? A bullish candlestick as well. But I drew this line and drew this line. Okay, and drew this line as my low of the week. It's the low of the week, low of the week, and I also drew another line on top. The first two candlesticks, check and see if the first that we identify, that will give you the high and low of the week. The first two candlesticks, this candlestick and this candlestick, are the first two candlesticks. This is the high of the week and this is the low of the week. Then you draw. I use a green line to identify the two lines. This is low of the week, high of the week, and you can see it, high of the week and what? Low of the week. 30th here, here. So here. Now the next thing is to identify the bias of the week. Now GBP USD actually was giving me, it took time for me to identify what was the bias of the week. So it was on, so this is Monday, this Tuesday, Wednesday. It was on Thursday, Monday, Tuesday, Wednesday. It was on Wednesday evening, towards the later part of the day, that it gave me that the directional bias of the week was Wednesday. So it took time. Meanwhile, it was consolidating on a 4 hours time frame, because look at it. This is the first candlestick, second candlestick, high of the week, low of the week. Once the candlestick passes through this line, the market is going to be in the lower part of the week. Lower part is going to be bearish. So above here is going to be what? Bullish. So what I did was that I now drew psychological levels. These are psychological levels. What are psychological levels? Psychological levels are levels that are rounded up figures, are rounded off prices where people can buy or sell. So buyers can buy or sell, or sellers can sell. Sellers can sell or buyers can buy. So look at this line. This is psychological level, and it's what? Let's see what it is. 1.27000. This is psychological level. That's why I draw that line there. Now then I start identifying them. Identify this one, identify this one, this one, this one, just like that. Then the other lines I also draw as well. Key levels. Now the reason is that how it works is that when the market, okay, now let us try and let's see. Okay, let's go to a 15 minutes time frame. It's going to be clearer. Okay. Yet I would have cleaned the whole of this, but I don't want to do that because I want to explain to you what I did in the previous week, and that gave me good pips. So what I'm trying to say overall is that I have two strategies. You can use the break and retest to trade, but break and retest is good, but this multi-time frame analysis gives me more accurate entries. Now look at it. 30th, this low of the week, high of the week that I drew on the 4 hours time frame. Now on my 15 hours time frame, what happened? Okay, each time, this is what I'm looking for. This is confusing, but what I'm looking for is each time you have, for example, you have a psychological level, then you have a trend line, and you have the market coming like this. Once the market makes a double top, or a double bottom, right? You take double. Now it's trying to make, once it touches here, it gives a two touch. The first touch, second touch. This second touch, take a buy to the next line. So you just buy here. See, So that's the idea behind this particular. That's the idea behind. That's the idea behind the entries in this strategy. And look at, you can see that henceforth I waited. You can see that I'm looking for, the market came from here, hit here, touched here. I entered a sell. See, I entered here, and I was able to ride this thing through. Okay, then came here again, up, down, up. I bought here. I bought this one. It's quite messy, but I'm just trying to show you what I did. Okay. Came down here, touch here, consolidated a bit here. Then while it was coming down, I bought from here. I mean, I sold from here. And you can see I was able to get this one right. Then look again, came here, touched this line, and I bought. Each time the market does this, I would kind of buy. But what I did was that I used this particular kind of Ashim candlesticks. It's very, very good. It's very good. It gives you a very good signal. For example, look at it. Very, very clear and very good. Look at it. Each time, once the market is going down, it's going to give you most of them thick reds, consecutive red. Most of the time, it's going to give you consecutive reds. If it's going up, consecutive blues. I mean, is it green? Consecutive reds for sell. Consecutive buys. You see, it's following. You see how thick it is. Consecutive, a little bit of that. Then consecutive red, consecutive green, red, green, red. Look at this one. Consecutive thick, and it's thickening. Once you see wicks, know it's about to reverse. Once you see wicks, so I was just building and catching all these pips like that. So in summary, if you don't understand what I've explained, I'll just give a summary that once a trend line meets a psychological level and the market's around that area, okay, just for example, look at this now. This is a trend line. Sorry, this is a psychological level. This is a psychological level. One, right? Look at this trend line. Two. Now, once the market is around that, once the market gets there, it's around. Once the market is around the psychological level or around the trend line, and there are wicks around there, be ready to take the direction of the trend or of the market. For example, now if it's been giving me a a green, you can see these wicks moving to the right side, and what it's giving me what that's like giving me a sell. Then I took a sell. So what I do is that I use the attitude of the candlestick, and also the fact that the market is able to give me a double top or a double bottom. See, it's forming double tops, double bottom, double top, double bottom. See, that's how I'm able to do that. This is even more accurate because it doesn't make you, it can guarantee you good number of pips, but you just need to be patient. And this is good for a day trading. This is how I used to grow small accounts. And this is FX Mesh, smashing it. If you like what I'm about, please like, subscribe, and share. I know this particular explanation might not be too clear because I wanted to explain. I wanted to clean the whole of this, but I don't want to clean it because I want to show you what I did in the past. But I will have to explain this particular multi-time frame more as time goes on to make it clearer. But one thing I would like you to understand is that you should try as much as possible to start with a break and retest strategy, which is very good. Once the market breaks a structure, it retests the structure, then go in the direction of the market. So if you like what I'm about, please like, subscribe, and share. I'll catch you in the next one. Peace out.